This is MacroVoices, the free weekly financial podcast targeting professional finance, high net worth individuals, family offices, and other sophisticated investors. MacroVoices is all about the brightest minds in the world of finance and macroeconomics telling it like it is, bullish or bearish, no holds barred. Now, here are your hosts, Eric Townsend and Patrick Ceresna.
Now let's get to that chart deck. Listeners, you're going to find the download link for the post-game chart deck in your Research Roundup email. If you don't have a Research Roundup email, it means you have not yet registered at MacroVoices.com. Just go to our homepage, MacroVoices.com, and click on the red button over Harley's picture saying, looking for the downloads. Eric, let's cover crude oil starting with the EIA inventory.
EIA printed a build of 5.8 million barrels. Great big build, but the drawdowns on finished products more than made up for it, with gasoline drawing down 6.3 million barrels and distillates drawing down another 3.1 million barrels for a net petroleum drawdown of 3.6 million barrels. Cushing, Oklahoma, building 1.2 million barrels. The $6 correction of the last 2 days is exactly why I'm not chasing this market. There's no way that I want to be short this market. I think the geopolitical risks are extremely high to the upside. But I don't dare go long in size because I think we need a better setup. And there's plenty of possibility to take a huge loss in that trade if we go the other direction down before we go up in energy prices.
Well, Eric, we got a short squeeze on the upside, and obviously it's now mean reverting. But I think it is actually a trend shifter. I'm generally biased to the upside, and I wouldn't be shocked if there was another squeeze to the upside toward $80. I think it's purely liquidity driven, and I wouldn't want to anchor it off of fundamentals, which is essentially expect a lot of volatility as a lot of traders are offside on this. So it's just going to whip the market in both directions. Generally, I think, though, that we could easily see oil back up into the 80 handle, at least for a short period of time. Now, Eric, let's talk equities. We're recording this before we see the CPI and PPI numbers, but the market has broken slightly higher. What are you thinking?
Patrick, I'm not surprised to see the melt-up continuing here. And, call me a conspiracy theorist if you want, but I think it's as simple as they're pumping the markets into the election. Plenty of good reasons to think about hedging here, but again, I think these markets are likely to continue to melt up into the coming election. Now, don't forget, a lot can happen in these last few weeks before the election. Another attempt on President Trump's life is entirely possible. I would say it's probably more likely than not, and needless to say, that could introduce more uncertainty, and who knows which way this thing could go. But I think barring major news events, the most likely outcome here is that the market continues to melt up into the election.
Eric, while the melt-up does continue, there are a number of target zones up above around 5,900 that are on a way of being completed. I think that even if the market does muster up a reaction to the upside first, I think that a correction at some point is underway. That doesn't mean it has to be a drastic one or a deep one, but we are getting into earnings season, and there could be a number of variables that just allow the market to go through some degree of a consolidation. Let's move on to the dollar, which continues to bounce. What are your thoughts?
Just as I predicted last week, a counter-trend rally is on to the upside in the dollar. This week's close above 102 on the Dixie is a sign that it probably has farther to go, with the next obvious resistance level just above 103, right around 103.20 or so.
Yeah, Eric, I'm trying to keep it really simple on the dollar. It was so oversold. A bounce back to 103 where the fib zone is, and a bounce on the US dollar yen back to 150 was a very typical retracement or reaction from a very oversold dollar. But I think that a lot is going to now hinge on the outcome of the elections. And I think that the dollar is probably going to settle in. And the next major move in the dollar off of these levels is probably going to have the tailwind of an outcome of the election. All right, Eric, let's talk gold.
Patrick, I'm absolutely delighted by the pause in the gold rally. We were looking 2 weeks ago at an extreme overbought situation. We've moved from extreme overbought to just moderately oversold. The slow stochastics are still pointing down, so the correction is probably not over quite yet, but we're nearing the end of it, and we haven't lost that much ground on price. That means that the stage is set, once we do bottom out here on this correction, to move to new highs, maybe getting above 2,800 by election time. Now, of course, as I mentioned earlier, a lot can happen in these last few weeks between now and the election, and needless to say, there's plenty of room to go in either direction. But barring unforeseen circumstances, I do not think that this rally is over by any stretch. I think we're in a short-term consolidation to just work off that overbought condition so we can have one last big rally into the election. At least that's my base case.
Well, this retracement in gold is now coming back to the moving averages. The 2600 area was an area that I thought had every opportunity to be tested. There's no reason not to assume that it's a buy on dip area. And so as this pullback is coming in here, we're tactically looking at putting on new long trades for a retest of the highs. All right, Eric, let's touch on uranium.
Spot uranium prices finally seem to have bottomed, and the price discount in spot has vanished. So it feels like the market is now maybe just having a little bit of a pullback from that first round of exuberance and excitement that the bottom is finally in. And that means that we may be close to filling in some of those gaps that were left in the charts below the current price level. My resting limit orders await those gaps just in case they happen to get filled in coming days, which I think there's a good chance that they will. So I'm reasonably confident that the bottom is in for uranium miners. Now, of course, you can't promise anything in this business. Anything's possible with news events, and a broad equity market sell-off would certainly do the trick in terms of taking the wind out of the sails of this uranium market. But I think there's a good chance to fill those gaps before we move much higher in price, and I'm going to be using that opportunity to add even more to my already overweight uranium longs.
Well, Eric, it's nice to see uranium come back to life after spending virtually the entire year in a deep consolidation. The bigger question here is, can we see the bulls keep building on this recent momentum shift? Will we see accumulation on dips and all the other types of patterns to suggest that we might have another big upside going into 2025? At this stage, this correction has been so long and so deep that there's no reason not to suspect that there's a new bull market potentially starting here.
Folks, if you enjoy Patrick's chart decks, you can get them every single day of the week with a free trial of Big Picture Trading. The details are on the last pages of the slide deck, or just go to bigpicturetrading.com.
That concludes this edition of MacroVoices. Be sure to tune in each week to hear feature interviews with the brightest minds in finance and macroeconomics. MacroVoices is made possible by sponsorship from BigPictureTrading.com, the Internet's premier source of online education for traders. Please visit BigPictureTrading.com for more information. Please register your free account at MacroVoices.com. Once registered, you'll receive our free weekly Research Roundup email containing links to supporting documents from our featured guests and the very best free financial content our volunteer research team could find on the internet each week. You'll also gain access to our free listener discussion forums and research library. And the more registered users we have, the more we'll be able to recruit high-profile feature interview guests for future programs. So please register your free account today at macrovoices.com if you haven't already. You can subscribe to MacroVoices on iTunes to have MacroVoices automatically delivered to your mobile device each week free of charge. You can email questions for the program to mailbag@macrovoices.com, and we'll answer your questions on the air from time to time in our mailbag segment. MacroVoices is presented for informational and entertainment purposes only. The information presented on MacroVoices should not be construed as investment advice. Always consult a licensed investment professional before making investment decisions. The views and opinions expressed on MacroVoices are those of the participants and do not necessarily reflect those of the show's hosts or sponsors. MacroVoices, its producers, sponsors, and hosts Eric Townsend and Patrick Ceresna shall not be liable for losses resulting from investment decisions based on information or viewpoints presented on MacroVoices. MacroVoices is made possible by sponsorship from BigPictureTrading.com and by funding from Fourth Turning Capital Management, LLC. For more information, visit MacroVoices.com.